What are serious investors actually trying to understand when they look at Africa? Short answer, they are not asking, is Africa worth it? They are asking, can I trust this? Can it scale? Or can I get my money back? Today, I'll walk you through the questions behind their questions. So founders can answer them well and investors can evaluate the continent clearly. I live in the middle of this. I raise from investors and I invest in African founders. And I'm bringing both sides into the room at the Ajim Summit in New York in September during the UN General Assembly week, which I'll tell you a little bit more at the end of this video. But first, the actual thinking. Quick note, this is education only. It is not financial advice, legal advice, or a recommendation to invest in any market, company, or fund. I'm sharing how I think through the questions so founders and investors can have better conversations. By the end of this video, you will understand how to thoughtfully evaluate Africa as an investor, what they are truly worried about, and how founders should answer. Behind every investor question about Africa is one deep question. Can I trust this and can I grow it? 4 parts, then the summit. The question behind the questions. When an investor asks a founder a question, there's almost always a deep question underneath it. Founders lose deals by answering the surface level of that question and missing the true one. For example, an investor asks, how big is your market? The surface question is about size. The true question is, can this get big enough to matter? Meaning, can it scale? Scale means serving many more customers with your costs rising just as fast, without your costs rising just as fast. So do not just quote a number, show why this can grow large. Another one is an investor asks, how do you reach customers? The truth question is about distribution, meaning you actually get your product to people. In fragmented markets where customers are spread across many places and channels, reaching them is often harder than building the product. So the investor is asking, do you have an edge in reaching people that others do not? Here's a common mistake. And I watch founders make it in meetings every week. The investor asks how big the market is, and the founder proudly recites a giant number. The whole continent, 1 billion people. The investor's face goes flat. Why? Because the number answers nothing about the founder's actual chance. The deeper question was, can you win a slice big enough to matter? Can it grow? A founder who says, my first market is small importers on a trade route. There are 200 of them. They pay every week and I can reach them through associations that they are already part of, wins the room. Small and specific and reachable beats big and vague every time. So the skill for founders is this: hear the deeper question and answer them. And the skills for investors is to ask the deeper questions directly. Both sides get further faster. Next is trust and infrastructure, the true worries. Let me tell you, actually keeps thoughtful investors up at night about Africa. It is rarely the idea, it is trust and infrastructure. Trust first. Money moves on trust. An investor wants to know, will the numbers I am shown be honest? Will the founder do what they say? Is there a proper structure protecting my investment? A founder who can bring clean records, clear governance, and honest answers calms this worry instantly. A founder with vague raises it. Infrastructure is second. Investors know that power, internet, roads, and payment system can be uneven across markets. So they ask, does the business still work given those gaps? The strongest founder turn this around. They build businesses that work with the infrastructure that exists, or that even solve the gap. When a founder shows they have designed around the true conditions on the ground, investors relax. Let me make it concrete. 2 founders pitch the same delivery idea. The first says, once the roads and the addresses improve, this works beautifully. The investors hear a bet on things that the founder cannot control and passes. The second says, addresses are messy, so we build our own simple location system using landmarks and phone pins, and it already works today in the mess. Same market, different opportunity, same gaps. One founder waited for a perfect wall, the other one built for the wall that already exists. The investor funds the second one every time. So the pattern is clear. Investors are not looking for the perfect market, they are looking looking for a founder who sees that the true conditions clearly and has a plan that survives them. Currency, exit, and getting money back. Now, the money worries, said plainly, because investors think about them constantly. Currency. Many African countries move a lot against the dollar, and investors putting in dollars want to know if this company grows in local currencies but the currency weakens, do I still make a return? This is a fair question. Strong founders address it directly. They show revenue that holds value, or businesses that earn across borders, or plans that account for currency movement. Ignoring it completely will worry any investor. Addressing it heads on builds confidence. Exit. Here's the term. An exit is how investors eventually turn their ownership back into money. Usually when a company is sold or goes public, and quite often during secondary sales. Investors ask quietly, how do I get my money back one day? They want to see a believable path to an exit. Founders do not need a guarantee, but they should show they understand that investors need a way out eventually, not just a way in. So when an investor seems focused on currency and exits, they are not being negative about Africa. They are doing their job, which is they want to make sure money can go in and come back out. Founders who speak this language stand out immediately. How to actually evaluate Africa as an investor. Now, let me speak to the investors watching, because this is a useful part even if you never attend my event. How should you actually evaluate the continent? 1, drop the single story habit. Africa is not one market, it is many. Nigeria is not Kenya or Ghana. Currency, rules, and customers differs. Evaluate a specific market and a specific customer, not a continent. 2, weight the founder heavily. In markets with gaps and fragmentation, the founder's judgment matters even more than usual. Look for founders who see conditions clearly, reach customers others cannot, and answer hard questions honestly. 3, study distribution and trust above almost everything. In this market, the winner is often whoever reaches and keeps the customer, and whoever the customer trusts with their money. A strong product with a weak distribution loses. 4, do proper due diligence and structure your investment well. Diligence means verifying what you are told. Structure means proper legal agreements that protects you. This is how you invest with confidence anywhere, and it matters here as well. 5, get close to the ground. The investors who do well in Africa are not evaluating from a distance or assumptions. They talk to the founders, visit, and build local knowledge. That is part of why I gather people in person. Being in the room teaches you what a spreadsheet cannot. Next, the Ajim Summit. So let me tell you why I created the Ajim Summit. For years, when people talked about investing in Africa, the answer was often too risky, too early, too hard to understand, too far away. But I keep coming back to one question. What if Africa was never the problem? What if the problem was the wrong people were asking the wrong questions? That is the theme of the summit. Why not Africa? Not hype, not, charity, not vague Africa rising language. A serious conversation about capital, risk, return, founders, exits, and what it actually takes to build and invest on the continent. The summit is happening in New York this September during the UN General Assembly week, when many decision makers are already in the city. It is intentionally small. We're capping it at 150 seats, applications only, because the goal is not to fill the room. The goal is to build the right room. Investors who want to understand Africa the honest way. Allocators studying emerging markets beyond headlines. Fund managers thinking about where capital goes next. Founders building scalable tech-enabled companies for African markets. I will only announce confirmed speakers and guests when they are approved to be shared. But the reason this room matters is not one name on a flyer. It is the quality of the conversation. It is the chance for serious people to sit together and ask better questions about the future of African tech. If you are an investor who has been curious about Africa but unsure where to start, this is for you. If you are an allocator trying to understand emerging markets beyond the obvious narrative, this is for you. If you're a founder building for the African markets and you want to be around people who take the opportunity seriously, this is for you. And if you have ever heard someone say Africa is too risky, I want you in the room where we ask the follow-up questions. Compared to what? Because risk exists everywhere. The question is whether you understand it. The next generation of African companies will not be built by people waiting for permission. They are already being built. The only question is whether serious capital will understand the opportunity early enough. So if this is your wall or the wall you want to understand, apply to attend the Ajim Summit. Use the confirm link in the description once it's live. And if you're still asking why Africa, come to the room where we're asking the better questions. Why not Africa? One line again. Behind every investor question about Africa is one deeper question. Can I trust this, and can it grow? Every investor question has a deeper question underneath, usually about trust and scale. The true worries are trust and infrastructure. So show clear records and a business built for the actual conditions. Investors also think hard about currency and exit, comes in and gets back out. So address both directly. To evaluate Africa well, drop the single story. Wait the founder, study distribution and trust, do proper diligence and get close to the ground. And the Ajim Summit in New York this September during the UN General Assembly Week is the room where founders and investors do exactly this in person. If you do one thing, whether founder or investor, practice hearing the deeper question behind the surface question. If this made venture and investing in Africa feel simpler and more honest, that was the whole goal. Subscribe for more practical breakdown like this. Share the episode that helped you the most. And if the Ajim Summit is for you, check the link in the bio. I would love to see you in the room in New York. Founders, what is the hardest question an investor has ever asked you? Investors, what do you most want to understand about Africa? Let us start that conversation in the comment. And until next time, I'll see you soon.